India's trade gap suddenly shot up in October. The deficit jumped 141% and touched $21.8 billion. At first look, this seems alarming. But once we break down the numbers, the picture becomes much clearer and not as scary as it sounds. A trade deficit simply means India bought more from the world than it sold. In October, both things happened at the same time. Imports went up sharply, and exports slipped a little. Most of the stress came from merchandise goods, while services continued to perform well. India's total exports in October were $72.9 billion, which is a fall of only 0.7%. Services exports actually grew a strong 11.9%. The real issue was merchandise goods, which fell 11.8% to $34.4 billion. But when you look at the April to October period, total exports still grew 4.8%. Merchandise exports grew 0.6%, and services exports grew 9.75%. India even recorded its highest ever exports in the first half of the financial year. This means the long-term trend remains stable. The biggest headache for exporters right now is the 50% tariff imposed by the United States. This is only on merchandise goods, not on services. India's exports to the U.S. dropped 20.4% in September, the first full month of a tariff. Exports to the U.S. have been shrinking since June. October was one exception because exports to the U.S. rose 15.4% compared to September. Exporters did this by offering discounts and finding new buyers inside the American market. But even then, October's exports to the U.S. were still 8.6% lower than last year. A 50% tariff is simply too big a hurdle for many sectors. The sectors that depend a lot on U.S. buyers have been hit the most. Leather and leather products fell 15.7%. Gems and jewelry fell 29.5%. Organic and inorganic chemicals fell 21%. Engineering goods fell 16.7%. Cotton yarn fell 13.3%. Man-made yarn fell 11.8%. Jute products fell 27.8%. These sectors are labor-heavy and rely on established supply chains. Shifting to new markets takes time, so the pain is likely to continue. Imports were the real reason behind the spike in deficit. India's total imports jumped nearly 15% to $94.7 billion in October. Services imports grew only 8.1%, while merchandise imports grew 16.7%. The main reason was gold and silver. Gold imports rose from $4.9 billion in October last year to $14.7 billion. That is almost a 200% jump. Silver imports rose 530% to $2.7 billion, although from a smaller base. This happened because the entire festive season, including Dhanteras and Deepawali, fell in October this year. In India, demand for gold skyrockets during festivals, no matter how high the price is. Looking ahead, merchandise exports will remain under pressure as long as the 50% tariff stays. But there is some good news. India and the U.S. recently held the 6th round of talks on a bilateral trade agreement. Both sides are now talking again about finalizing the first part of the agreement. If the tariff issue is settled in this deal, export momentum could return quickly. On the import side, gold and silver imports are unlikely to stay this high in the coming months. But investors may still buy more gold as a hedge against currency risks, so imports could remain slightly elevated. The Export-Import Bank of India expects merchandise exports to reach $114.2 billion in the October to December quarter. This would be a healthy growth of 5% year-on-year. So even though October looked worrying, the fundamentals remain stable and the long-term direction still looks positive.